What's going on, everybody? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market. This is another Sunday edition of Trade with Travis. I have 5:07. I actually ended up having typically we do this at 4 p.m., but ended up having some stuff that I had to do around the house, so I wanted to make sure that I ended up giving everybody my undivided attention right when the market actually started to open. So let's go ahead and get into it. I'm super ready to have fun. Let's go ahead and get through it and kind of go from there. I don't know why I'm stumbling over my words. Here we go. Not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand, of course, trading involves risk of being able to make money, also involves risk of being able to lose money, so please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. With that being said, as we go through and take a look at that, a look at all of these charts, like always, we always try to find markets that are trending, meaning that we can be able to find them in a R2 or R3 ranking based off of the retracement. And then after that, before we end up taking a look at any type of trade, before I can even consider it, it has to have time frame alignment, meaning that the weekly and the daily are trading in the same direction. Once we end up finding that, then after that we move to overbought and oversold zones with the stochastic to see if it matches up the same direction of that time frame alignment. Then after that we look for catalysts. The catalyst can be broken down into two separate things: a counter trend line break and economic news that goes along with it. And then after that, obviously, we end up using equity management to be able to make sure that we're putting ourselves into the best situation. So as we go through these next 28 minutes of being able to look at pairs, I'm going to end up going through. We have people online that are interested in being able to look at some pairs. We will go over those. But within this overall time, we're going to spend time being able to talk about pretty much every market that we can: forex, indices, cryptocurrency, U.S. Indexes, and everything else like that. So here we go. Today, nothing for its overall news is going to end up coming out going into Monday. We're going to end up having Governor Bailey's going to end up speaking. Then after that, we're going to end up having retail sales from the New Zealand dollar. We take a look at what's happening on Tuesday. Tuesday will end up being the first. Let's see. Yes, Tuesday will end up being the first fundamentals day of the overall week. It's going to end up being basically Eurozone and New Zealand dollar based. New Zealand dollar is going to end up going through that interest rate statement a little bit later on throughout that day, and the interest rate decision before being able to go from there. Wednesday, when we end up kicking back at this, we're going to end up seeing FOMC meeting minutes. So Jerome Powell's going to end up speaking. Please make sure that you keep that in mind. That just means to me that Sunday the market will probably end up having a slight move. Monday will probably end up making a somewhat of a retracement move. Tuesday, we'll probably see a little bit of consolidation. Wednesday, we'll see a slight move at the beginning of the day, and then after that, a true move at the end of the day. So please keep that in mind as you go through and be able to look for opportunities yourself. Thursday, we're going to end up having GDP and retail sales from the Canadian dollar and retail sales from the Australian dollar. And then after that, one Friday, to close it out, we're not going to have anything, so it can end up being a fundamental stage. So with that being said, before we end up getting started, if you would, if you're interested in being able to learn what we're doing with our boot camp, we've revamped every one of our boot camps. We've revamped every one of our education courses. Super excited to be able to talk about that, including Fibonacci Fundamentals Masterclasses and automation systems, the FX Striker, and the Swing Trade EA. If you're interested in being able to learn a little bit more, all you have to do is go to cartercowcapital.com/start here. Sign up for a free class. What I end up doing is contacting you personally about being able to place you into the best class possible. And then after that, try to meet whatever needs that you may end up having when it comes down to your trading journey. All right. So with that being said, let's go ahead and take a look at the big charts and go through the big three. Let's see what's going on with that. We're going to start out with the United States dollar index. Now, remember, going into last week, what I ended up saying was this. I ended up saying that the market had completed the extension. We were basically in a weekly sell zone. And because we were in a weekly sell zone, that put us in a position to where we're probably going to look at a transition trade. Now, if you end up getting into this market early, based off of this overall move last week, then you end up catching the early portion of the move. But we can clearly see now that the market has broken an inner trend line, which means that when the market moves from an inner trend line, it will gravitate to the outer trend line. So do expect the United States dollar index is going to end up getting a little bit weaker, which means that gold and oil and a few other things that typically end up getting stronger within that overall time. That will be great opportunities, and that kind of matches up with what we've been talking about all year long when it comes down to those movements. So taking a look at this from a daily. Daily, we can see that the market is in the buy zone based off of this first initial move. So going into this week, we probably may end up seeing that this market may end up starting to push down and flush early, especially if there's some big news. If there's no big news, and what you end up seeing that the market will basically have this breakout, retest this breakout before actually falling down and being able to go from there. So United States dollar index, I'm going to stay away from at the beginning of the week because there's nothing really to do aside from look for retracements before seeing actual moves get started. Now we take a look at what's happening with oil. Oil is kind of in a predicament to where we're looking at the summer months, and remember, as I've said multiple times here, um, oil and gold and a few other things kind of move in their own cycles, right? So you look at you look legitimately at the beginning of the year all the way until right around May. Actually, right around yeah, I said it right. Right around April to May, the market will end up humming and really starting to be able to sustain a move that was made in the previous months. Then from there, it will start to slow down just a little bit, going into mid-April, mid-May, and then after that, it will start to pick back up in June and July because of supply and demand and because of people basically traveling. Then after that, it typically slow down from August and September and October, and then after that, a little bit in November, it'll start to be able to make this move. But it's basically getting back to where once you end up cold sessions and you actually need a little bit more oil to be able to heat up your homes or to be able to travel and everything else like that, it end up going up. That's the reason why I think that we're in this consolidation pattern. We end up having a strong move to the upside. We end up breaking to the downside, hit the 382, so the market is considered to be healthy. But because we end up breaking out to the upside, I am going to end up saying that this move is still more to the upside. So, with that being said, we take a look at this from a daily perspective. We can see that we're in this consolidation box area with the resistance being 115 and the support being 95. I do expect what's probably going to end up happening is that the market will probably end up moving to the midway point, in which it already did a couple of days ago. And because it already moved a couple of days ago to the midway point at 105, anytime that we end up getting a counter trend line break based off of that movement, I would say look at it based off of the 2 hours, somewhere around there. Um, yeah, I would see if we can get a counter trend line break on the daily because it's at 73% on the stochastic. But um, whenever there's a true strong breakout move that you end up seeing with a candlestick formation or anything else like that, I would take that serious and expect that the market is going to end up pushing up to 136 a barrel before it's starting to be able to close off. So, um, oil, because it is in consolidation, I'm not going to do anything yet, but my eyes are completely on it for it being able to make a move. Now, going into last week, type in a wire, yes, if you're online, first off. And even for the people that's going to watch this in a recording that end up getting into gold after we end up talking about it breaking a counter trend line break. And if you did get into gold when it happened, which was right around 1786, you should be up 100 points. Well, very close to 100 points before it being up. Um, Hopefully everybody did. If you didn't, then no worries. If you take a look at it from a daily perspective, what we're seeing on this weekly is that the market went all the way down to the 786. Um, let's see. Make sure I said this right. Put a horizontal line right here. Yeah, went all the way down to the 786. Once we went all the way down to the 786 and broke the counter trend line break to the upside, this is now considered to be a R2 trade. If you've never been a part of us, an R2 trade is a trade that has a trend that's going to the upside with a strong counter trend line break, and then after that, we're looking for a movement to the upside. This means that based off this movement, that gold will probably end up getting up to 2164 long term based off of this weekly movement for the long term move. Now, it's going to take a little while for it to be able to get there, but if you're interested in being able to get in and let this be one of those pairs that you can hold on for a while, I think that that would be a great opportunity to be able to do so, especially with the daily being in this position of where it ended up finally breaking the inner trend line. Remember, once the market breaks the inner trend line, it will gravitate toward the outer trend line. Plus, we're looking at the United States dollar starting to stall out and start to be a little bit weak. With both of those things happening at the same time, it makes gold a very interesting opportunity for us being able to get in if you have not got in at this particular point. So what I would look for is I'll go in the 2 hour, I'll wait for 2 hour counter trend line breaks. If you look at it, you'll probably end up seeing one of those movements right at the open of the market. The one thing that I will say is when you take a look at this, has the market completed the extension yet? That answer is no. It's at 1855. The market may end up gapping up overnight. The market may end up gapping up when the market opens up at 6. But If everything stays the same, there goes your counter trend line break. Go to the 15 minute. See if you can be able to catch it in the buy zone, or see if you can catch a slight retracement. If you have it, then take it. If not, then just wait for the next move that may end up happening. But there's a true counter trend line break right there for the movement. There's a D extension on the 2 hour that is still up and ready to go at 1855. So it may be a quick scalp waiting for the next move, and then after that, pounce it again on the next move after that. So there you go. Stop loss. The stop loss, if you're trying to be safe, the stop loss will end up being below the overall swing low in this case. Was at 1732. I would go below 1732. Matter of fact, I go below the B because the B is at 1829. I go right around 1825 ish to be able to place the stop loss in. If you're looking at being able to stay in this for a long time, keep in mind because the market has broken the inner trend line and is gravitating toward the outer. I will expect the market will be able to make a move up to there before getting out. So there we go. Very interested in that move. I really do like what I see with that. Take a look at Bitcoin. Let's see what's happening with Bitcoin and kind of get an idea. I've been working on this new script or this new indicators that I've been taking a look at for a while now. I'm trying to get an idea. I'm going to do it based off of Smart Trader, but I am going to incorporate what I'm seeing with this. And to be honest, it's kind of scary if you are a person that is long-term holding on Bitcoin. It may end up being a lot of opportunity for people that are not in Bitcoin, but if I'm just looking at the market right now and trying to make a decision, don't like what I necessarily particularly see. So let me explain what I mean by that. Let's see, DTC. All right. So first off, talked about this. We talked about this long-term consolidation area and where the support was at 31,000 once the market ended up completing the extension. Well, that downside the extension has been completed. The market ended up hitting. We actually ended up moving from there. We broke the A of the upside as well, which means that we should be looking at a crown that should be starting to form on the downside. You're not familiar with what crowns are. Basically, there's an ABCD pattern that ended up getting broken, and then from that broken move, you end up having some type of U-turn, and then after that, it'll start being able to make a move like that. So let's talk about what I expect. I do expect that Bitcoin is going to end up popping up to the upside. The reason why I think it's going to pop up to the upside is because it has to do a full retest of this overall consolidation area right around 32,000 at least before being able to make this move. The second reason is because you take a look at this swing right here, and I'm going to get rid of some of this stuff that I have here, and I'm going to use this too right here to be able to talk about it. There you go. To be able to talk about what's actually happening. The extension's already completed. We look at this overall move. We can see that the market 6150 is at 39,000. May end up getting up to there. Look at the B, or I'm sorry, the strongest retracement area to be able to make the market healthy is at 36, 329. And it wouldn't surprise me if people end up starting to push back up on it. What's going on? Um, what's going on, Claudia? Hope everything's going well. Um, let's see. But if you look at the move, I do think that there's going to end up being some type of up move. Now, here's the thing that kind of worries me. If this market ends up breaking to the downside, it could fall all the way down to 10,800. Now, do I think that's going to end up happening overnight? No. You look at all of the moves and everything else like that. I think it will take some time if that's going to end up being the case. But we know when it comes down to speculative things like Bitcoin that if it starts to catch a head of steam, then it's really going to move. We've seen this market fall all the way down to 25,000 to be able to complete the de-extension of the movement in the first place. So the question is, what is the move to be able to get into? And that's a great question. I would say more than anything else would be one, what is happening inside of this area? I kind of showed it a little bit earlier. Matter of fact, I'm going to show it off of this chart. Um, you take a look at it from a 2 hour perspective. The market is inside of this consolidation triangle area. And because it is within a triangle area and basically in the middle of this overall wedge, you can do two separate things. Um, yes, I'm fine. Thank you. Um, hope everything's going well with you. If there's a pair that you want me to take a look at, you can be able to type it in as well. Um, if we're looking at this, I can see box consolidation. I can see a wedge that's actually showing up as well. And we probably won't see anything until probably right around 8 to 9 o'clock tonight, or in this case, probably about 3 hours from now. Typically, for some reason, that's when the market truly moves. Maybe because it's the Japanese session, and that's when typically most of the movement actually happens. But I have my alerts kind of set up to where this what can happen is two separate things. Um, the first thing would end up being that if we look at, let's see, drawing two, so I can get drawing two, drawing two, drawing two. Okay, there we go. Two things can end up happening. One, because this market end up hitting the daily, the extension of the market can pop up to the upside, retrace, then after that start being able to move and get a healthier move back up to 35, 36,000. Right? That could be the first thing. That's wishful thinking for people that have been getting in and are long-term holders. The one thing that could also happen is this. Let's say the market has already retraced down to the 23.6 was at 30,000. If this market falls, I'm going to show this based off of a daily. Probably might be the best. It probably might be the better move. What's going on, Casey? Hope everything's going well. Long time no here. That's more on me, not on you. Yeah, that's way more on me and not on you. Um, what we could see is this: if this market does make a fall like that, um, it could break to the downside, retrace, and because it only went to the 23.6, then we could see that more people may be interested in getting in right around the 127. In this case, that will end up being right around 16,000 if this market does fall down to that area. Now, the question is, does that make sense from a volume perspective? Does that make sense from everything else that we end up looking at? So we'll put up all the information. We look at volume profile, and if I end up putting in all of this information together and be able to take a look at it, we see the strong pocket that we're in right now with limited orders of people actually getting in for being able to buy or sell, which means to me, if it breaks down past right around 28,500, which is this last little block right here, if it falls down within that area, the first area where it may fall and kind of find support would be at that 18,500 area. And then after that, possibly all the way down to the 1,600 area um, before actually being able to make a move, with the point of control being at 10,000, which is also the extension, which is all the way down at that area. So it could get real spooky based off of being able to take a look at that. The trend meter is basically saying that there's a strong sale. We look at the ribbon. The ribbon is saying that it's in a strong bearish type of movement. All of the moving averages basically curled over. We can see that the squeeze is kind of tightening up a little bit, so it may end up being a little bit of a move from there. But overall, there's a this market is in a huge crossroads, and for people that are in and have been in for a while, especially at high prices, you may end up getting some type of relief based off of movement to the upside, or it can get real scary and see this thing fall all the way down to possibly 15. Now, for me, because I've been out of my Bitcoin positions, I would love to be able to get in at 16 and be able to see if we can be able to ride this joker back up. But I think for everyone else, you would hope that the market kind of breaks to the upside. All right, so there we go. Let's take a look at Ethereum. Let's see. Type on a wire, yes, if that makes sense for people that were looking at that there. I'm going to make sure that makes sense to everybody before we move forward. Okay, so going back to what we ended up talking about with Ethereum. I end up saying that this market broke the inner trend line, which is this purple trend line over here. I'm going to put a arrow by it. We ended up saying that about 5 weeks ago. When the market ended up breaking the inner trend line, I said that it was going to innermost trend line, it was going to gravitate to the inner trend line. Then after that, look at being able to gravitate to the outer trend line. With that being said, this market has failed down to a strong support area at 1750, and then after that, pop back up to the upside. So that may end up being the relief that Ethereum may end up having when it comes down to this. Now, I can also be able to make a case that this move is definitely not over with to the downside. Well, let me explain why. We take a look at what this move actually is. The D extension would be at $956, which once again has confluence with the outside or outer trend line area from there. I truly do believe that it's not at the bottom yet. Um, I definitely don't believe it's at the bottom yet. I think it has way more room to be able to run. Um, but 1750 was one of those areas that you had to be able to pay attention. Can't wait to see the bottom to buy in. I think that you can be able to catch it right at 1,000, and quite frankly, that'd be at a great position. If we're just looking at the weekly D extension. Um, but ABCD swing from this one is basically this. We got A, have a B, market went up to the 5.0, which means that it should fall all the way down to 956 to be able to complete the D extension. Um, we're clearly a little bit oversold, but we're not at a point to where this market could necessarily just slow down. But one thing that I do like when it comes down to Ethereum is I don't see necessarily that strong triangle that we end up seeing based off of Bitcoin. Now, obviously, we got a little bit of it if I wanted to make a makeshift one, let's say here. And
Daddy.
That's what about it.
I need 6.
6 what?
I need 6 hours SpongeBob.
I don't know what you're talking about. But if you're here, you gotta say hey. Come on. Oh.
Never smack.
No, look, say hey. Look at the window. Say hey.
Hey,
wait.
My name is Smiles.
There we go. Good.
Hey, Raise.
Don't do that. Um,
Daddy, I want 6 hours of SpongeBob to build.
Okay. Once I get done, then we can do that. Go.
Daddy,
Go.
You have to get a ladder.
Oops. But yeah, taking a look at that, you can see a makeshift. You can see a makeshift of a triangle. Take a look at it from a 2-hour perspective. Oh, there it is. It's doing the same thing. Obviously, Bitcoin basically makes the move, and then after that, everybody else kind of follows. So essentially, I don't want to cut these weeks. Go. I think I'm gonna check this one right here. There we go. All right, so essentially that's what we're looking at right there. So once again, I'm not making a move until I see what's going to happen in either direction. Once there's a breakout, then after that, I can be able to truly know what's going to end up happening. I do think that if it does break to the downside, and we do have a lot more stuff that keeps on going wrong for its economic news, that it could fall down to basically 950. So I might end up placing in some type of a pending order to be able to see if I can be able to get into that area based off of that movement. But for right now, I'm not going to do anything.
Daddy, I want 6 hours SpongeBob.
Baby, you're not in the camera.
Yes, I can. Yes, I can.
Hey, bye. See you later. Go, go, go.
I don't want to
go. Last one, or last two, let's talk about US 30, and then after that, Nas 100, and then we'll go ahead and close out. Unless there's any other questions that anybody else may end up having for us being able to go from there. Let's see. US 30 from a weekly perspective is once again curling over. Finally, you can see some of those moving averages in the ribbon truly turning into a bearish movement. But the market has been bearish for quite a long time. And because it has been bearish quite a long time, there probably may end up being some type of relief that may end up coming overall.
Daddy, what are you doing?
I'm trying to talk to people on live stream. Bye, 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 bye.
I'm gonna talk.
Everybody give me 1 second. Okay, sorry about that. So let's take a look at this and let's go ahead and get these fields kind of drawn out. I can be able to make a better decision. So take a look at the field. Here goes your A. Here goes your B. Market went all the way up to the 618, completed the extension last week at 36.69, which means that which means that the ABCD swing of US 30 is done for this first swing from a weekly perspective. Now, we take a look at that. There goes your A, there goes your B, there goes your C. Market completed the D extension. Because we are in a D extension, now we're looking at an R5 trade, meaning that the market is going to end up starting to be able to retrace at some point in time before it's starting to be able to push back up, and then after that, possibly making another wave down to the downside in a couple months. Okay, so just keep that in mind. Remember, summertime for NAS 100, US 30, and everything else like that is typically slower, meaning that you'll probably end up seeing a lot of consolidation for it to move unless there's something that may end up driving the market that we just don't know of. And I don't expect that to be able to happen at least no time soon. Okay, so with that being said, um, just, based off of that movement, because we don't have a fractal low yet, which means that we have two candlesticks to the right that we can be able to work off of. There's nothing to do here. So I wouldn't go into today expecting that you're going to end up making a strong trade up US 30 unless you're trying to scout the market and trying to buy, and based off of that buying, trying to get back to the new fee of 382 or anything else like that for the movement, or possibly being able to get it back up to 34, but I don't expect that to happen no time soon. So here is your new hypothetical field. Let's say if the market doesn't fall below this area. If that does happen, then what you could see based off this new ABCD swing, I'm going to get rid of this one and make a new one, is that possibly you could be able to see that the market may end up doing something to the extent of this. A, B, market gets up at least to the 382, and possibly could get back up to the 618, which would be at 33.5, somewhere around there. But I'm going to count this bottom area right here at the 382 as the possible area. So 32.5. It probably end up being that area, and if it does fall there, then it could fall all the way down to the 27,000 area for it being able to fall from there. Now, the question is, does that match up? Is there anything that would give me the reason to be able to say that that could be the area? Uh, if you look at it, this area is somewhat of a pivot. They end up happening a long time. Okay. Casey, what you got? Pound yen entry at 160, stop loss at 85 with a price target of 161.21 risk ratio. We'll take a look at it. So US 30, unless you're trying to scalp it for it being, unless you're trying to scalp it for it being able to buy, um, based off of a 15-minute retracement or anything else like that, I would not be interested in being able to make a move off of that one. Simply because the market could be able to U-turn at any point in time, and clearly right now the market is bearish. That's my particular reasons why I wouldn't necessarily look at that. So I'm going to get off of that. Now it's 100. Let's see if there's any more room left on this one before saying a no on this one as well. Take a look at it from a weekly perspective. Same deal. Got a full crossover. Got a full crossover when it comes down to the ribbons. We take a look at it from the high price to the low price. Let's see. Here is your A. Here is your to the left, to the left. Here is your B. Yeah, it's barely the B, but it is the B. Market went all the way up to the 5.0. The extension is expected to complete at 10,760. So if I'm looking at any trade or any type of index to be able to get in, if I'm looking between both of those, to me, it will end up being NAS 100 because NAS 100 has a little bit more room to be able to fall before completing the extension, which means that it's in a push zone. So A to B to C, I expect that the market could fall all the way down to 10,700 or 10,800 just to be safe when it comes down to that. We look at this as is this a past support or resistance? Yes, it is. Ever so slightly it is, but it still is. Um, and I think that we still have some more room when it comes down to the fall. Okay. Now, with that being said, let's take a look at the daily move, and then after that, try to make a little bit more of a better decision. Okay. So if that's your weekly swing, let's take a look at the daily swing. Daily field is here and here. That was complete. Second daily field, see here to here. Okay. The newest field, which is the newest daily field, is here to here, which once again got completed. So um, even though I like what I see with Nas 100 for us being able to have a little bit more room, the problem is that this swing is already complete. So from a risk reward standpoint, from a Fibonacci perspective, there's no other trade to be able to do aside from scalping. Um, the thing is, I would just look for high prices and see if you can be able to catch those. We don't have a fractal low yet, so it's kind of hard to be able to gauge, even place a fib on. So I probably might stay away from this one as well. Yeah, I probably might stay away from this one as well. You're probably going to end up having diminishing returns. So the only one that I truly like right now is gold. I like gold to the upside, and quite frankly, I got into gold already to the upside for what's that one. Last one, let's take a look at pound yen. We get out of here. Um, let's see if I remember this one correctly. Casey, okay, you're trying to buy. Okay, if I remember this one correctly, we ended up talking about how this market was in consolidation. We said they wanted to wait for the breakout. Once the breakout ended up happening, we wanted to look for a retest. Once we got the retest, and we were looking at being good to trade. Um, the market ended up getting all the way up to the 618, but did not complete it. And I'm going to place in a new field right now just to be able to show exactly what it looks like. Let's see what was the high price on this one. 168. Let's just get up to 168. Okay, so the extension on this one is complete as well. Um, from a weekly perspective, uh, Casey, we don't necessarily have a new field to show up yet. Um, but I can create one right here. Let's see. Try that one. Nope, that one's complete as well. That's a look. Yeah. Let's see. From a daily perspective, I still like to buy, and obviously the stochastic and everything else may be a little bit off. Um, 175 will end up being a new long-term take profit location. Got a counter trend line break. Got a retest. Market not necessarily in the greatest position for us being able to um, get in for the stochastic, but beggars can't be choosers. So you're going to get in, you're going to get in. Um, you said stop loss at 161. 161. No, see, stop loss at 85 cents. So it's got to be below that swing low. I like it. I like what I see from your entry and everything else like that. The one thing that I would caution you, Casey, is that um, only because the market when it opens up is probably going to end up being truly in the sell zone going into tomorrow. It may get a little bit more difficult, especially if there's some good news when it comes down to gold. The reason why I say that is because remember the one of the bigger correlations is the correlation between gold and the Japanese yen. So gold is going to end up going up in value. Then I mean the Japanese yen is going to go up in value as well. So that would be the only thing that I would say look out for more than anything else. But overall, obviously the stop loss is tight enough to be able to do something with. We do have an upside movement with a counter trend line break, and we just came out of that consolidation to the upside. So it may end up being a good move overall. Um, you like what I end up doing? I do appreciate if you end up clicking on that like button, if you click on that subscribe button, and be able to share this out with the people that may end up being interested in what we end up doing for being given trade. Also, you would like to be able to hop inside of one of our new revamp boot camps that we're going to end up having. We're actually starting those at the beginning of next week's session. So going into May 30th, going into the summertime, we're going to end up having summer school. If you know me, I'm a teacher, so going right into summer school, being able to teach people how to be able to trade from the beginning. Super excited to be able to hop in with that and being able to teach a whole bunch of people when it comes down to that. All you have to do is go to cartercowcapital.com/start here, be able to sign up, be able to place in your information. From there, I'll be able to contact you individually, be able to see what is going to end up helping you out for your overall trading style. Obviously, the automation systems and everything else like that have been rolling. Old school FX Striker has basically ended up generating a 180% return over the course of the last month. So I'm super excited about that for people that have been using that for a while. For the people that have been using FX Strikers is slow and steady, and it keeps on doing its thing as well. So if you're interested in being able to learn about either one of those as well, you can be able to hit up that information. Like always, make sure that you end up planning your trade and trading your plan. Everyone, I see you again on Wednesday. And then once we end up getting into the summer months, you'll be seeing a lot of me going each and every day when we do live trading in the morning. Take it easy.